All right, what's going, guys? Jeff here. Today's Friday, super duper late today because I just got home. All right, it's right now 11:55 p.m. And I just cooked. I'm in the middle of eating it halfway through, but I'm gonna get this news out of the way as soon as I can. And I'm super duper tired because I stayed up for Snapchat's earning, and then I barely slept a wink actually. And yeah. So anyway, let's cover some news today. All right. Let's start with the first important thing, which is Jerome Powell could sell expectation of half point rate hike in May. So as we all know, the FOMC is going to be happening on the 5th of May. And I will be doing a video on that tomorrow, basically explaining to you guys what is going to be happening for my own expectation of what's going to be happening for the 5th of May. Of course, clearly what Jerome Powell is saying, he already kind of inherently stated that 50 basis point hike is definitely on the table. So that is definitely out there right now. So I do think that there is a good possibility of that happening, but we do understand that, of course, right now we're looking into the market. It's kind of weird that I'm talking while the market is open, but let's look at the S&P, okay? The S&P right now, they're down about 1.7%. Okay, the SPY is down to $430 again, which is quite bad because SPY kept on trying to trail highers at a higher point at 450 and 450 and such. Right now, back to a 430, very, very strong support line. And my concern is that we actually, break this support line and actually go down even further. So, of course, those are kind of my concerns. And, this kind of just bring forth more recession risk. But, of course, I'm not going to bore you guys with that. I'm going to be, talking more about that in tomorrow's video. All right, so anyway, let's leave this as it is. Next up, let's talk about Elon Musk. Say that he has commitment for $46.5 billion in financing for Twitter deal, which is quite big because basically this means that Elon Musk is not just talking about it. He said he has $46.5 billion in funding for Twitter bit. Okay, this is a huge thing because right now, basically, he is just saying that, I'm not just talking about how this is going to be a final deal and such. I actually have the money and I'm ready to make the offer. And of course, this way, Twitter will definitely need to play ball with them because if Twitter wants to, they can actually get rid of the poison pill. But of course, there's going to be a lot of litigation going on into that. So, of course, I'm not sure how that will all kind of work out. But because of that, okay, let's look at Twitter price at the moment. Twitter is now doing at $48, actually went up to $49.73 in session highs, which is pretty interesting. So, honestly speaking, I'm not sure right now if I'm actually looking into the market. Of course, I'm very, very late into the market right now. It's very hard for me to say what's actually worth playing. I see a lot of red, but I don't think that it is that easy for us to actually play shots into this market either. Bitcoin is down. Everything is down, actually. Chinese tech companies are up, so that's something we got going, I guess. But yeah, it's going to be very, very hard for us to really make a sort of a play of some sort in this market. But yeah, okay. Anyway, do stay tuned for the end of the thing where I actually explain my weekly trades because this is quite important. I did tell you guys that I will be going through my weekly trades. All right, so let's move on to the next one. All right, risk shattering pro job policy by taking hammer to prices. So, excuse me, Jerome Powell wants to quell inflation without sinking the labor market. Success or failure will be a defining part of the Federal Reserve Chair's legacy and a pro-employment policy he's championed. Can we cool down sort of labor demand without causing employment to fall? The Fed Governor Christopher Waller said on April 11, he sounded cautious, calling interest rate policy a brute force hammer that sometimes break things. That's the tricky road that we're on. And I'll probably talk more about this in tomorrow's video as well, because this is basically where we actually get in between the lines of what happens when you actually increase interest rates and such. But I'm pretty sure the core audience do already understand how this actually goes about, what kind of fine line are we actually treading in between and such. So yeah. All right, so Powell will have one of the final words on the imminent policy outlook before the U.S. Central Bank enters its usual pre-meeting blackout when he addresses an International Monetary Fund panel on Thursday, which is the IMF. And yeah, so I think that this is going to be a little bit interesting for us to really see. Let me see. Okay, so over here, I have a video on Jerome Powell basically.
and the human suffering that's going on there, well, from the output. But the U.S. economy is very strong, performing very well. By most forecasts, we'll have another strong growth year this year. The labor market is extraordinarily tight, extremely tight.
See, the way Jerome Powell is talking about it, he's speaking as if that the economy can definitely handle a 50 basis point hike, which is kind of the concerning part here.
Historically so, and to the point where really there's an imbalance between supply and demand for workers. And of course, the big issue that we're very focused on is inflation and getting inflation back down to our 2% goal.
But if we start to slow,
well, okay, so clearly that's not going to be happening. Getting back to the 2%, not in this year at least.
Materially in our economy, will you be happening even if inflation is still above your target?
Well, so first of all, you asked about a soft landing. Basically that's our goal. Our goal is to get demand, use our tools to get demand and supply back in sync, so that inflation moves down, and do so without a slowdown that amounts to a recession.
So that's basically, you know what, I'm not going to go through the whole entire thing here, because like I said, I'm just going to explain it to you guys on the other side. But okay, let's move over to Snapchat earnings. I cannot really find a lot of good news. I think that because all of them kind of just ran across as it is, so there's not really much for me to find. All right, let's bring up this Snapchat earnings. All right, so for people who don't know about Snapchat earnings, let's look at the previous quarters. Okay, in quarter 2 of 2021, they beat by almost 900%. Quarter 3 beat by 117%. Quarter 4 beat by 115%. Do understand that when they say by this huge amount of percentage over here, or this huge amount of percentage, do understand that it's not really by that much, because it's more like, they expected negative 1 cent and they reported 10 cents. Okay, so of course it sounds like a lot, but it's not actually that much, which is why even with a negative 400% miss on EPS, is basically expecting 1 cent and reporting negative 2 cents. Okay, that's the kind of like the surprise out of it. But however, I did go through the whole Snapchat earnings yesterday, which I don't think that it is actually that scary. Okay, in terms of revenue wise, I think that of course it is shy of what we wanted. We wanted 1.07 billion dollars, and we got 1.063. So of course, by a small margin, still a miss. Nevertheless, net loss was $360 million compared to $287 million in the prior year, which we are kind of expecting net loss to kind of go lower. But of course, we also have to take into consideration that inflation is also a huge factor. Okay, adjusted EBITDA was $64 million compared to negative $2 million in the prior year. So I thought that this was really, really good that we actually got an increased adjusted EBITDA. The operating cash flow, okay, honestly speaking, I'm not that huge of I'm not that concerned about operating cash flow because for this kind of company where they actually get to bigger numbers, I do think that a difference of like 10-20 million is not going to change that big. Usually the operating cash flow actually goes into wages, bonuses, structural and such. So not that big of an issue. Or free cash flow actually went down. So this is something that I'm more concerned about because for free cash flow, we want it to ensure that this is because let's be honest here, we want to expect that the whole economy is going into a recession esque style, and because of that, it's very important for us to make sure that cash flow is still going up. And of course, with this actually going down by 20 million for cash flow is a little bit free cash flow is a little bit concerning. But like I said, I'm not that worried about this. But I'll let you know what is actually the most bullish things that I actually like about this report. Okay, right now, I'm just going to give you guys a price update. Snapchat right now doing $29.35, down 0.1% as compared to down 17% in the aftermarket, something scary like of that nature. All right, so DAUs, which is your daily active users, were 332 million, where we expected 330 million. So I'm very, very happy to see that, because especially for social media platforms, we understand that daily active user, monthly active user, these are important numbers. Okay, Of course, with the whole CNBC board, Verizon, all of them, they're actually talking about how are they going to be monetizing these daily active users. And I do think that for social media platforms, it will eventually come by, and it's very hard for you to actually find how are these daily active users or monthly active users being properly monetized. Other than if actually going through the whole research of all the companies who actually hired or created campaigns, advertising campaigns on Snapchat, Twitter, whatever the social media platform is, and trying to match the sales being reflected via those campaigns and such. That's one of the only way for you to actually realize are you actually monetizing the daily active users properly. But I'm very, very happy to see that the daily active users are actually increasing, and also increasing more than we expected. Okay, going to 330 million, because personally I do not use Snapchat, and I still thought that that if I don't use it, there's going to be a lot of people who do not use it as well, which clearly wasn't the case. Okay, it's an increase of 52 million or 18% year over year. And in terms of growth wise, for the amount of people who are using the platform, 18%, I kind of like that. I like that a lot. Okay, so nevertheless, very, very good on this report. Of course, I do think that Netflix, I do think that Snapchat currently is actually going down in price. It's not really due to the earnings report. If anything, it's actually due to the SPY. Okay, S&P is down 1% and Snapchat is still down 0.1, 0.2%. That's what I mean. Okay, if the SPY, okay, an ETF that basically mimics the whole entire index, everyone is going down, okay, of an average of 1%. Okay, if we are actually going through tech companies after what Jerome Powell said yesterday, let's be honest here, come on, okay. The Corsair down 11%, Arrival down 8%. Let's go by market cap, because I think that would be a lot better. Apple down 1.1, Microsoft down 1.2, Alphabet down 3%. Oh my gosh. Amazon down 1.7%. Tesla up 0.5%. Facebook down 1.6%. Nvidia down 1.6%. Okay, you can see that the average of them are actually around the 1% mark on the lower side. So it's kind of scary to actually see, for Snapchat to actually only be down 0.5%. I do think that this is very, very bullish for Snapchat. However, at the same time, I do not think that the momentum is going to come up immediately together with Snapchat to actually bring up the price. So don't expect your calls to actually be making money for Snapchat. I'm very, very happy that I actually close off my Snapchat covered calls because it's going to get destroyed anyway. But yeah, nevertheless, let's look at this. DAU, daily active users, increased sequentially and year over year in each of North America, Europe, and rest of the world. Okay, so yeah, over here they just basically talk about where their investment actually went to. I thought that was just normal. Okay, something that was very, very interesting. Okay, over here, we expanded our offering for advertisers. Okay, online retail platform Gold uploaded 2 AR shoe try-on lenses to its public profile and saw over 1 million plays in the first week alone. Revenue from dynamic ads more than tripled the year over year, as we have increasingly seen advertisers leverage their products catalogs to automatically create ads in real time. Launched the first AR certification on Snap Focus. Announced mid-roll ads in Snapstar public stories, allowing select creators to participate in the mid-roll ad revenue sharing program in stories. Published our latest Snapchat generation report, providing advertisers with key insight into how Snapchatters are using the app. Okay, so overall, just reading by this whole entire offering for advertisers, okay, what this actually means is that they are starting to move like Facebook. They are starting to move like the big traditional social media companies. They are starting to monetize their audiences. And that's why and this is exactly why I am so bullish on Snapchat. This is exactly why I'm bullish on Snapchat. If they are now finally starting to, well, I don't want to say milk their audience, but they're finally starting to work around the monetization of their core audiences, I do think that this is going to be super duper bullish for Snapchat. They do this for the next two quarters. I think quarter 4 of 2022 is going to look super duper delicious for Snapchat. So yeah, of course, if you ask me, I'm gonna continue to invest in Snapchat. If I do see a cheaper alternative, like an entrance price for me for Snapchat, while I still have money at the same time, Snapchat is definitely one of my go-to. I truly believe so. So yeah, okay. So that's kind of like the basis of the whole entire report. Basically the numbers and such. A lot of them top line. Okay, fair enough. Okay, top line, bottom line, revenue, EPS. All of them are misses. But like I said before, those misses are actually very, very minimal, and I do think that that's not that big of an issue for us. So yeah. All right. So anyway, let's look if we have any other news on Wall Street before. Well, stocks tumble and yield stabilizes. I think that's very, very normal. I do think that for bond yields to stabilize, it simply means that people are really starting to accept that as a fact that we are going through a 10-year cycle of bad stuff. Yeah, the entire stocks indexes, all of them are going lower simply due to the fact that what Jerome Powell actually said. Of course, that's going to be affecting the market a lot, and I do understand why. Okay, this is going to be bringing inflation. Well, not inflation. This is going to be bringing recession fears all over the area. So that's going to be very, very scary. And SPY just broke 430. It just went down 430. SPY is now at 429.96. This is tough because the SPY has never broken this support line in a very, very long time. So I do think that I would go and read up on a report on Goldman Sachs to see if they are increasing their recession percentage chance and such. All right, now down to the good part where you guys like to hear about my weekly trades. All right, so let's talk about weekly trades. Okay, so first up, okay, I got rid of all of my bad companies that I refuse to hold on to for me to keep on losing money. And you'll be surprised how much have I already so-called saved. Okay, first up, Hippo Holdings. It's a insurance company. I sold 95% of my shares, holding only 5%, because in the future, if I do think that we are in a more risk-on market, I will actually get back into it, which is Hippo Holdings. I sold 95% away. Fundware. Honestly speaking, I'm very happy about Fundware because for me, Fundware was really a contract. It was a premium yielding company for me. I yielded a lot of covered calls for Fundware, and I also made a lot of money from Fundware as well. However, my buying price is still a little bit high. It's about $4 or so. So I sold off 80% of my shares right now. Of course, the price of my average price of Fundware definitely went up because I sold at a loss. But yeah, same thing with Fundware. There is a good chance that I would want to buy back into Fundware. I just don't know when. All right, next up, I sold off. Where is this? I sold off Peloton. Okay, because today, by right today, my Peloton covered call was going to be expiring. I closed it off yesterday because it was like about 2 cents for my contract. So I closed it off, and then I sold off 90% of all my Peloton. And of course, today Peloton is down quite a bit. So of course, I did save up a little bit of money. So I'm very, very happy with that. Same thing, right now I just want to hold a little bit more cash. I was trying to get off margin, so that's a very good thing for myself. Next up, I did sell Lemonade. Okay, same thing, an insurance company. I don't think that insurance company is going to be doing very, very well. So my concern is where insurance is going to be, the whole insurance tech is going to go. So Lemonade, I did get rid of 60% of my shares because the other 40% is actually in covered call mode where I would need it for collateral to do my covered calls, which of course my covered calls are also making money. My covered calls, let's see. I sold my covered calls for $6 right now. It is worth $1.90. So those are going to be making good money as well. So after I actually close off this covered calls, then there is a good chance that I might just hold on to those shares. Of course, if Lemonade do want to drop below, I don't know, like $16, $15, there is a good chance that I might buy it back. Same thing, I only want to wait to a risk-on environment before I actually make any of these dangerous moves. All right, next up, I have plowed money into SoFi. Okay, I plowed money into SoFi. SoFi is now my second biggest holding in my entire portfolio. I'm very happy with SoFi. Of course, SoFi is constantly showing us new lows, which is very, very disappointing. Right now, SoFi, the lowest SoFi is at the moment is $6.38, which just happened just a few minutes ago, which is why, of course, it's a little bit disappointing that we are actually seeing such a low on SoFi. But yeah, I do hope that SoFi is going to be going up, which their earnings is going to be happening on the 10th of May. So I am quite hopeful for SoFi. So we'll actually see what actually happens with SoFi. But similarly, I do intend to sell covered calls on SoFi if I do see a green day on SoFi, just in a way for me to actually do some form of hedging. But I'll get rid of my hedges right before earnings, because I do think that the earning call for SoFi might be quite interesting. But yeah, at the same time, same thing, get on margin. Margin is going to kill you in this market, and evidently it probably killed a lot of people already. So margin, very dangerous game for you guys to really get into. All right, and then afterwards, okay, I bought more Robinhood. Okay, I talked about Robinhood before, and I'm gonna tell you guys again, I bought more Robinhood. Robinhood is currently at $10.20. I bought a little bit more. Of course, Robinhood is currently still like, I think, my 6th or 7th position. But I do like Robinhood. I do think that Robinhood's chances of them actually rebounding back is going to be high. Of course, the DAUs and the MAUs are, of course, going down as well, because with more brokerage coming out and people actually stop going through with the investment hype, I do think that Robinhood is a little bit dangerous. But I do think that the upside for Robinhood is a lot higher than we expect. And I do think that Robinhood have better quarter 3s and quarter 4s as compared to their quarter 1s and 2s. So we have to see what actually happened with Robinhood. But yeah, I am a little bit excited for Robinhood. But of course, my current average price for Robinhood is about $16 or so. I actually brought it down from 20. I think it was 26. I think 26 or $27. Along that line, my average was about there, and I brought it down to $16. So pretty good. All right, now next up, I bought a little bit more of Palantir, okay? Because Palantir was actually kind of like zigzagging about the $12 mark. It was actually going to the $13 mark, and then afterwards it kind of went back down to the $12 mark again. And at around $12 mark, that's when I actually made a little bit more of my purchase. But of course, with Palantir, I have a lot of various exposure to the stock. I have it in equity, I have it in derivatives, aka multiple call contracts, with different expiry dates as well. So, but for Palantir, I do have a wide variety of exposure, but of course, it's a little bit riskier for some of those calls. All right, so next up, I'm very, very happy with this. I'm not gonna lie. Occidental puts. So today, Occidental kind of went down a little bit. Earlier, when I was on my way back from a client meeting, I actually bought and more Occidental puts at $3.80 for my contract. $3.80 right now is worth $4.50. So that's already a very, very good thing for me. I'm gonna be checking how that actually work out later on. So yeah, very, very happy with Occidental puts. But of course, same thing. This is gonna be expiring quite late into it. So I'm not really that worried about it. But yeah, I think that's about all for my weekly trades. And like I said before, for weekly trades wise, I am trying to really switch up my entire portfolio and really focus on the stocks that I really want to get into. So yeah, anyway, that's all I have for today. Sorry for it being so late, but thank you guys so much for watching. I'll see you guys tomorrow. Well, tomorrow for my weekly video.